Hello everyone, John AG here. Welcome back to my channel, Aurex. If you haven't yet, subscribe to my channel. In this channel, you will find the real information, the real market updates that everyone else cannot tell you, or is simply too afraid to tell you. So please subscribe to this channel, and I love all of my subscribers for your incredible, unwavering support. And please, I need you to watch this video till the very end, because YouTube will not push my videos to more people. The algorithms are designed to suppress this exact kind of truth, so we have to fight back by staying engaged from the first second to the last. Today is Sunday, May 17th, 2026. I am not sitting in a climate-controlled studio. I am not reading off a teleprompter fed by central bank press releases, and I am not staring at the sterile, manipulated numbers of a brokerage screen. I am standing with my boots on the ground in the real world. I am standing in the physical economy, the only place where true price discovery actually happens. And what I experienced today, over the last few hours, is something that should send a cold, paralyzing shiver down the spine of every single person who is currently holding their life savings in digital fiat currency, hoping that the government or Wall Street will somehow protect them. Let me set the stage for you, because you need to understand the psychological trap that has been set over the last few weeks. Since the beginning of this year, we watched the paper price of silver take a massive, violently engineered hit. After skyrocketing to that historic, mind-bending $121 per ounce mark back in January, a surge driven by global panic, escalating tariff wars, and a desperate flight to safe haven assets, the paper markets did exactly what they have been designed to do for the last half-century. They slammed it. The bullion banks and the institutional shorts used a temporary spike in treasury yields, a fleeting mirage of a strong dollar index, and high-frequency algorithmic trading to relentlessly push the spot price down. At one point just recently, we saw the spot price plummet into the high 60s, briefly touching around $67 before bouncing back into the low 70s. So, like any rational investor, like any protector of generational wealth who sees a massive sale flashing in bright green letters on the global financial screen, I decided to take immediate action. I walked into the city today with a very simple, straightforward mission. I wanted to buy silver. I wanted to hand over rapidly depreciating fiat currency, pieces of paper that are being printed into oblivion, and exchange it for real, tangible, historically proven money at that heavily discounted spot price. I wanted to buy $67 silver. I wanted to back up my own personal truck and take advantage of what the screen told me was reality. What I discovered was not just a discrepancy between spot price and retail premium. It was a terrifying, undeniable revelation about the terminal state of our global economy in 2026. It was a glaring, blinding spotlight exposing the absolute illusion of the financial system we are all forced to live under. Every single dealer I visited today, every single one of them without exception, said the exact same thing. And their answers are the ultimate proof that the price on your screen is an orchestrated lie. I started my morning at a premium, highly respected bullion dealer right on the edge of the financial district. This is an institution. This is a place that, historically, has never had an issue with inventory. In the old days, you would walk in, you would pay a modest, reasonable premium over the spot price, and you would walk out with heavy pockets full of American Silver Eagles, Canadian Maples, or generic 10-ounce bars. But when I walked through those heavy security doors today, the display cases were an absolute ghost town. I am talking completely bare. There were a few wildly overpriced numismatic coins that no stacker wants, maybe a couple of fractional gold pieces tucked in the corner, but the silver trays, empty velvet. I approached the counter. The dealer, a man who has survived in this brutal business for over 30 years, looked physically and emotionally exhausted. He had the 1,000-yard stare of a man who had been fielding frantic, panicked phone calls since 6 o'clock in the morning. I looked at him and said that the screen says silver dipped to $67 recently, and it's hovering in the low 70s now. I told him I wanted to buy physical silver as close to that as humanly possible, and I asked him what he had in the vault. He looked at me and let out a hollow, defeated laugh. It wasn't a laugh of amusement. It was the dark chuckle of a man who is witnessing a systemic failure play out in real time. He leaned over the glass counter, lowered his voice, and told me that he did not have a single ounce of bullion to sell me. And even if he did have it, he told me I was not getting it anywhere near $67. I wasn't getting it at $75, and I wasn't getting it at $80. I asked him to explain the mechanics of what was happening behind the scenes. He told me that the very second the spot price was artificially pushed down by the paper algorithms, the physical market completely and violently detached from the paper market. It was an instant divorce. The institutional buyers, the massive family offices, the sovereign wealth funds, and the smart money, they did not panic when the paper price dropped. They did not sell their physical holdings. Instead, they recognized the manipulation for what it was, and they backed up the truck. They bought every single physical ounce he had in the vault. They paid massive, unprecedented premiums without blinking an eye, because they know the paper price is a suppression mechanism. They are using the paper dips to drain the physical reality out of the system. He explained that his wholesale suppliers, the massive mints and distributors, are giving him delivery times of 8, 10, sometimes 12 weeks, and that is if they are even taking orders at all. The premiums have skyrocketed to 40%, 50%, even 60% over spot for basic retail products. He looked me dead in the eye and said that if I wanted physical silver today, I had to pay the real price. And the real price is not what Wall Street or the COMEX tells you it is. The real price is whatever someone is willing to part with their physical metal for. And right now, in May 2026, nobody is selling. I left that shop, the gravity of the situation sinking in, and walked a dozen blocks to a second dealer. This was a smaller, family-owned pawn and coin shop, the kind of place that caters to the everyday working-class investor. The story was identical, but the human element was even more heartbreaking. The owner told me they were effectively out of business on the retail silver side. They had lines out the door of anxious, everyday people trying to buy, but absolutely nobody was coming through the doors to sell. People are holding on to their metal like it is a life raft on the Titanic, because they intuitively understand that the fiat ship is sinking. He showed me his buy board. He was offering to buy silver from retail customers at $8, $10, even $15 over the fake spot price, just to get some kind of inventory to sell to his desperate buyers. And still, no one was taking the bait. I watched a man in his 60s, in a faded work jacket, walk in and ask to buy just 5 ounces of silver to protect his pension. The owner had to turn him away empty-handed. The look of quiet desperation on that man's face is something I will not forget. I went to a third dealer, a major regional distributor that supplies smaller shops across the state. They had a printed sign taped to the reinforced glass door. Silver bullion, out of stock indefinitely. 3 dealers, 3 identical stories. I tried to buy $67 silver, and every dealer confirmed that $67 silver does not exist in the physical world. It is a digital phantom, a ghost engineered by algorithms to keep the masses asleep while the elite drain the vaults dry. We have to step back and look at the macro picture, because you cannot afford to misunderstand why this is happening. We are living through a historic, irreversible paradigm shift. For decades, the price of precious metals has been dictated by the paper markets, primarily the COMEX in New York and the LBMA in London. Massive financial institutions trade unbacked paper contracts, representing silver that simply does not exist. They trade hundreds of paper ounces for every 1 real physical ounce sitting in a registered vault. It is a massive game of musical chairs, a fractional reserve Ponzi scheme applied to the ultimate hard asset. When the central banks and the bullion banks want the price to go down to protect the illusion of the fiat currency, they flood the market with billions of dollars worth of naked short paper contracts. This triggers algorithmic stop losses, creating the illusion of a massive sell-off. The average retail investor looks at the screen, sees the giant red candle, panics, and sells their paper ETF shares, playing right into the hands of the manipulators. But the spell was shattered this year. When silver hit $121 in January, it was not just a speculative bubble. It was a profound realization by the global market that the fiat system is mathematically doomed. We have watched inflation transition from being transitory to becoming structural, sticky, and absolutely relentless. The cost of food, housing, energy, and basic survival is mathematically destroying the middle and working classes, and the central banks are completely trapped. Here we are, and the Federal Reserve is paralyzed. They tried to keep rates elevated to fight the inflation caused by energy spikes and supply chain collapses, but doing so is destroying the commercial real estate market, suffocating the bond market, and pushing the government's interest expense on the national debt to catastrophic, unimaginable levels. They are caught in a terminal death spiral. If they cut rates, hyperinflation ignites and the dollar collapses. If they keep rates high, the entire debt-based financial architecture implodes. The smart money realize this trap. Sovereign nations realize this trap. The BRICS nations, who are aggressively and successfully moving away from the US dollar trade system, realize this trap. So what did they do? They called the bluff. They stopped playing the paper game and started demanding physical delivery. When the paper price was violently smashed back down, the entities who actually understand wealth did not sell. They stood for delivery. They took those paper contracts, handed them to the comex, and demanded the metal be put on a truck and shipped to their sovereign vaults. This is exactly why the local dealers are empty. The global supply is being vacuumed up by sovereign wealth funds, Eastern central banks, and billionaires who know that fiat currency is entering its final phase of existence. The detachment is here. The paper price is merely the price of a derivative, while the physical premium is the true cost of reality. But the financial manipulation and the geopolitical flight to safety only represent half of this terrifying story. The other half is the relentless, unstoppable, and entirely price-insensitive beast of industrial demand. We must address the physical reality of what silver actually is. It is not just a monetary metal used for storing wealth. It is the most electrically and thermally conductive element on planet Earth. It is the irreplaceable cornerstone of the modern technological age. And we have hit a perfect, devastating storm of supply deficits. For the sixth consecutive year, the world is operating at a massive structural silver deficit. We are mining roughly 840 million ounces a year globally. We are recycling maybe another 200 million ounces. But the world is consuming vastly more than that, and the gap is widening every single month. The global push for renewable energy has accelerated. Modern solar panels require massive amounts of silver paste, and despite efforts to thrift the metal, the sheer volume of solar deployment is swallowing hundreds of millions of ounces. The electric vehicle revolution is another black hole for silver. An electric vehicle uses up to 3 times the amount of silver as a traditional combustion engine vehicle. Every connection, every autonomous sensor, every battery management system requires silver to prevent catastrophic electrical failure. And then there is the black swan of demand that almost nobody modeled properly just a few years ago: artificial intelligence. The explosive exponential growth of AI has led to the construction of hyperscale data centers across the entire globe. These massive computing centers require incredibly complex, high-speed architecture. They need absolute, flawless reliability. The microchips, the server racks, the massive power relays, the advanced cooling systems, they all require immense amounts of physical silver. Furthermore, we are living in a world of heightened geopolitical conflict. The military-industrial complex is consuming silver at a terrifying rate. Every guided missile, every advanced radar system, every military satellite requires high-grade silver components. Here is the most critical and terrifying part of this industrial demand equation. It is completely and utterly price insensitive. Think about the logic. If a massive tech conglomerate is building a $10 billion artificial intelligence data center, and the price of silver goes from $30 to $80 to $150 an ounce, do they halt construction? Do they substitute silver with a cheaper, inferior metal that might cause a $100 million server farm to overheat, short circuit, and catch fire? Absolutely not. They pay whatever the market demands, because the cost of the silver is a microscopic fraction of their total capital expenditure. The tech giants, the defense contractors, the automotive manufacturers, they do not care what the paper price of silver is. They only care about securing the physical supply to keep their production lines moving. They will outbid the retail investors. They will outbid the mints. They will sweep the global market clean, and they are doing it right now. On the supply side, we are facing a brick wall. Mine production has been flat to declining for a decade. You cannot simply flip a switch and mine more silver because the price goes up. It takes 10 to 15 years of geological exploration, brutal permitting processes, endless environmental studies, and massive capital investment to bring a new mine online. To make matters worse, roughly 70% of all silver is mined as a byproduct of base metals like copper, zinc, and lead. If the global economy enters a severe recession and demand for those base metals drops, the production of byproduct silver drops right along with it, creating an even tighter squeeze on an already starving market. We are watching a slow-motion collision. Industrial demand is accelerating vertically into the sky, while mining supply is crawling horizontally through the mud. Why does all of this matter to you? Why am I out on the streets, looking into this camera, pleading with you to understand the gravity of this situation? Because what is happening in the physical silver market is a microscopic, concentrated reflection of a macroscopic global tragedy. It is the story of the silent theft of your labor, the theft of your time, and the deliberate destruction of the middle class. every single time you go to the grocery store and see that the price of basic protein has doubled. Every time you open your utility bill and feel a knot of anxiety in your stomach. Every time you realize that the wage you sacrificed your time and energy to earn buys you less today than it did yesterday. You are experiencing the insidious, silent violence of fiat currency devaluation. Inflation is not an accident. It is not an act of nature. It is not solely caused by greedy corporations or temporary supply chain glitches. Those are convenient scapegoats. The root cause is the printing of unbacked trillions of currency units by central banks to fund massive government deficits that can never, ever be repaid through taxation. They are actively diluting the money supply. They are taking a giant pitcher of juice, pouring in gallons of water, and trying to convince you it is the exact same drink. When you hold physical gold and physical silver, you are stepping outside of that fraudulent matrix. You are taking possession of an asset that carries zero counterparty risk. Silver cannot be printed by a desperate politician to fund an endless war. It cannot be keystroked into existence by a central banker to bail out a collapsing, over-leveraged hedge fund. It is forged in the immense pressure of dying stars. It takes human sweat, diesel fuel, massive heavy machinery, and incredible risk to extract it from the earth. When the dealers tell me today that they have no silver at $67, they are telling me that the real, physical market has finally recognized the fraud of the paper market. The real market knows that the purchasing power of the dollar, the euro, the yen, and the pound is evaporating before our very eyes. We are witnessing the greatest historical wealth transfer in the history of human civilization. In times of profound economic crisis and currency collapse, wealth is never truly destroyed. It merely changes hands. It flows rapidly away from those who hold unbacked paper promises, and it flows directly toward those who hold tangible, scarce, intrinsic assets. The people I saw standing in line at the coin shops today, the ones who couldn't buy anything, the ones who were turned away, they are the ones waking up just a little too late. They are the honest, hard-working people who finally felt the pain of inflation deeply enough to realize their bank accounts are nothing more than melting ice cubes. But because they waited until the panic set in, because they waited until the cracks in the paper illusion became visible to the naked eye, they are finding out that the lifeboats are already full and the gangways have been pulled up. We have to look at the geopolitical earthquake happening right now in 2026. The de-dollarization of the world is no longer a fringe theory. It is accelerating at a breakneck pace. For decades, the United States exported its inflation to the rest of the world. We printed dollars, we bought foreign goods, and the world dutifully held our debt. But the weaponization of the financial system, the freezing of sovereign reserves, and the heavy-handed sanctions taught the rest of the world a brutal, unforgettable lesson. If you do not physically hold your wealth, you do not own it. Nations in the East and the Global South have been aggressively dumping U.S. treasuries and relentlessly accumulating physical gold. And history tells us that where gold goes, silver ultimately follows, often with a violent, delayed, slingshot effect that leaves the unprepared entirely behind. Silver remains the most undervalued asset on the face of the earth. When adjusted for the real inflation metrics of the 1980s, not the manipulated, suppressed CPI numbers the government feeds us today to hide the truth, silver's 1980 high of $50 would be equivalent to many hundreds of dollars per ounce today. The suppression of the silver price has been the absolute linchpin in maintaining the public's confidence in the fiat system. If gold and silver were allowed to trade freely, to seek their true market equilibrium based on the massive expansion of the global money supply, their prices would skyrocket. And if gold and silver skyrocket, it serves as a massive, glaring alarm bell signaling to the average citizen that their currency is completely worthless. It breaks the psychological illusion that keeps the system running. But the illusion is breaking anyway, regardless of the suppression. The physical shortage is the undeniable mathematical proof. The comex is bleeding inventory day by day. The registered stocks, the metal that is actually available for physical delivery, have been hovering at dangerously low levels. The authorized participants are playing a frantic shell game, moving metal back and forth between vaults, desperately trying to maintain the facade that there is enough physical supply to cover the massive mountain of paper claims. But as my dealer told me today, nobody is selling. The retail investor isn't selling, the whales aren't selling, the tech companies are consuming, and the solar panel manufacturers are consuming. The paper price can be painted on a screen to look like whatever the banks want it to look like. They can print 1,000,000 paper contracts on a random Tuesday morning and smash the price down to $50 if they truly want to. But ask yourself this: what does that fake price matter if you cannot buy a single physical ounce at that price? If a beautiful house is appraised by a corrupt bank at $100,000, but the owner refuses to sell it for less than $500,000, and there are 10 desperate buyers standing in the front yard waiting to pay $500,000 in cash, what is the real price of that house? The real price is reality, and the reality of silver in May 2026 is absolute scarcity, mounting desperation, and a profound tectonic shift in how humanity is beginning to value money. You must break the psychological conditioning that links your personal wealth and your family's security to a digital number blinking on a banking app. You have to begin to think in ounces, in acres, in tangible assets, rather than in fiat dollars. A dollar is nothing more than a unit of debt, a promise drawn on a bankrupt system. An ounce of physical silver is a unit of absolute freedom. If you do not currently hold physical precious metals, you are rapidly running out of time. The window of opportunity to acquire these hard assets at premiums that are even remotely accessible to the general public is closing fast. Do not sit on the sidelines waiting for the paper price to hit some magical lower number. It will not matter. The premiums will simply adjust upwards, and the dealer shelves will remain completely bare. If you find physical metal and you have the means to afford it without putting your family at immediate risk, secure it. Take possession of it. Prepare your mind and your emotions for extreme, stomach-churning volatility. The dying gasps of a global fiat system are never peaceful, and the transition will not be smooth. The manipulators who control this system will not surrender their power easily. They will use margin calls, they will change the rules of the exchanges, they will implement restrictive regulations, and they will use every piece of media propaganda available to shake you out of your hard assets. You will see days where silver rockets up 10%, and you will see days where it is violently smashed down 15%. You must develop an iron stomach. You must look past the daily noise, ignore the flashing red lights on the screen, and focus entirely on the fundamental, undeniable truth. They are printing trillions of infinite digital dollars, and they cannot print a single ounce of silver. I started this day trying to buy $67 silver, and I failed. But in that failure, I found an immense, undeniable confirmation of everything we have been warning about on this channel for years. The great detachment has arrived. The physical reality has finally divorced the paper illusion. The local dealers know it, the tech giants know it, and the Eastern central banks know it. The only question left is whether you know it, and what you are prepared to do about it to protect the people you love. This is John A.G. Thank you for walking these streets with me today, for feeling the reality of the market, and for seeing beyond the veil. Thank you for your time, your open minds, and your relentless pursuit of the financial truth. We are navigating incredibly dark and turbulent waters, but we are doing it together, as a community of awake, aware individuals. If this message resonated with your gut, if you feel the absolute urgency of what I am saying, hit that like button right now. Share this video with your family, with your friends, with your coworkers, with anyone who is still asleep to the fragile reality of our economic system. The algorithm will try to bury this truth, but together, through our collective action, we can force it through the noise. Leave a comment down below right now. Tell me exactly what your local coin dealers are saying. Are their shelves empty? What kind of premiums are they charging in your city or your country? Let's build a massive, global, real-time intelligence network right here in the comments section so we can track the physical reality together. Subscribe to Aurex. Stay completely vigilant. Protect your families. Protect your generational wealth. And never, ever stop questioning the illusion. I will see you all in the very next update. Stay safe out there.